Hello and welcome everybody. This is Nikki here with Absolute Accountant. As the year comes to a close, it is time to start thinking about your year-end business and tax strategies. In this video, we will be sharing some valuable tips to help you finish the year strong and prepare you for a successful year ahead. So let's dive right in. First, let's talk about some smart business strategies to consider as the year draws to an end. It is essential to review your financial statements, particularly your profit and loss, your balance sheet, and your cash flow statement. This will help you understand your company's overall financial health and all the ins and outs that went into your business throughout the year. These financial statements really tell a story over the past year, over the life of your business, of where your company's overall financial health is. So it is very important that you review those and understand what they're telling you. The second thing is if you have some inventory, if you're a retailer, if you're a contractor, anything that holds inventory, you definitely want to make sure that you're assessing that inventory. Consider selling off slow-moving items or writing down unsellable inventory to optimize your asset. The inventory is definitely an area in the tax world that you can use different strategies to help you lower your tax liability or put you in a better tax position now and in years to come. So it's definitely something that you're going to want to make sure that you're tracking correctly and accurately, and something that you're keeping a close eye on by assessing it over time. Another thing that I recommend to do for inventory specifically right around this time of year, since we're going into the end of the year and year end, is to do an actual physical inventory count and then reconcile that back to your source documents and your accounting data. Finally, if you have employees, consider doing year-end bonuses. This is a great way to boost morale and culture amongst your team, and additionally, it is potentially going to give you a greater tax reduction. It's going to potentially reduce your taxable income, in other words, because you have higher deduction, higher salaries and wages through those bonuses that you're giving your team, therefore having less taxable income. All right, so those were a few ways and some things to think about for the year end and getting your books in order. Now let's move into the critical area of tax planning. Now tax planning is definitely crucial to help you reduce your overall tax liability. And everything that I just talked about before, having good record keeping, checking your financial statements, assessing your inventory, those things are all part of tax planning. But the number one thing when it comes to tax planning and really just the success of any business is having really accurate, organized financial information. I always say garbage in is garbage out. If the information that you're putting inside of your QuickBooks file or your Excel spreadsheet or whatever accounting system that you're using, if that information is garbage or just kind of haphazardly stuck in there, it's sloppy, it's messy, it's not organized, well, that's going to generate financial statements for you, yes, because most accounting softwares do that automatically. But are they going to generate good quality, accurate financial statements? Maybe not, because it's sloppy garbage going in, sloppy data going in, it's going to get you sloppy data coming out. So you can put you can put everything into your accounting system and just throw it in there into a mess, and you're still going to get a profit and loss statement and a balance sheet. But those aren't going to make any sense, and they're not going to mean anything, and they're not going to give you the valuable data and the valuable insight that you need to make meaningful decisions in the future for yourself and for your business. So the number one thing is to have clean, accurate, reconciled accounting data so that what's being inputted into the reports is accurate and it is reconciled and it is clean so that we have good metrics and good data to use to make those meaningful decisions. So getting down off my soapbox on that one. But it does bring me to my very first point on tax planning, which is that it is absolutely critical to have effective record keeping. This is so important. Effective record keeping is totally vital for the smooth year-end processes and procedures and just keeping your sanity going into tax season, not only for yourself as the business owner and the taxpayer, but for your accountant as well. It just helps with a very smooth process. It helps from keeping things falling through the cracks and from keeping you from getting those lovely love letters from the IRS or any of the other taxing authorities. So yes, organizing your receipts, your invoices, your financial documents, finding a central location, somewhere where you can put all that stuff and organize it in a meaningful manner. This will definitely save you and your team valuable time, and it definitely will help you have a good picture of everything that you did throughout the year so that you can claim all of your eligible deductions. All right, so effective record keeping, absolutely the number one thing. If you don't take anything from this video, please take that. Other ways to possibly plan for taxation and some of the strategies that you can use at your end. You want to make sure that you are getting all of your allowable business expenses. So you're getting all of that travel time. You're getting all the meals where you took out your clients. You're getting all of the subscriptions that you've used for your business. You're getting your phone. You're getting your internet. You're getting some of that gas from when you were going out and about to your clients' offices. All of the allowable deductions, you want to make sure that you're capturing all of those, and you're definitely going to be able to capture all those if you have a good filing system and a good record keeping system. The other things that you can think about doing before the year ends is, again, paying bonuses, offering different employee benefits, and retirement, contributing to retirement plans. If you have one set up already, make sure that you're maximizing that if you can from a cash flow basis. If you're not, try to contribute something, because something is better than nothing, and these contributions can lower your taxable income, both from a business perspective and from a personal perspective. It really kind of depends on your unique tax situation, but this can help you reduce your overall taxable income. Biggest thing to tell you that if you're having any doubts, any confusion, if you're just totally lost, then I suggest that you go out and you find a really good tax professional. Yes, absolutely crucial that you have good guidance and good support from a qualified professional. So I definitely recommend reaching out, finding one that you really can get along with and that you really align with personally and professionally. That makes a huge difference in who you're working with, if you can get along with them and that you like them as a person. So get out there, try out a few, ask for referrals, and find one that really fits your needs. So there you have it. As this year comes to an end, these strategies can help you finish strong and set you up for a successful year ahead. Now remember, every business is unique, so it is crucial to tailor your approach to your specific needs. If you found this video helpful, please like and share it with others who benefit. And if you have any questions or need additional tips, feel free to comment below. Thank you for watching, and until next time, stay curious.